Another day, another AMD downgrade. It's not enough that we have this whole DeepSeek drama. No, that's not enough. We also need to have even more analysts coming out a week before the earnings report, right? Because, I mean, they could just wait a week, see what the report tells us, hear what they have to say during the earnings call, and then make up their minds. But no. Apparently, it's much better to come out after the stock is down, 36% year on year and a bit more since the peak. Right now, AMD is down another 1.36% on the day to $113.4. Year to date, the stock is already down, 6%. I don't just want to focus on AMD in this video, I want to touch on Intel as well. Intel will report their quarterly figures Thursday after the market closes. I'll of course update you then. It's going to be quite an interesting one. On Wednesday, we're going to have ASML report before the market opens. They will probably tell us a lot of their own opinion with regards to this whole DeepSeek thing. And then in this video, of course, I want to focus on DeepSeek and how that affects companies like AMD and Intel. So if you're interested in all of that, hit all the buttons, like, subscribe, all of that. I would really appreciate it. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So it seems like we're going into the next earnings report with a market cap that will probably stay under $200 billion unless something drastically changes in the next couple of days. The forward PE 25.6 times, really not that expensive. So everybody that's telling me, oh, AMD is super expensive because they only look at the PE for the last 12 months, which again does not make any sense because AMD today is in a much better place than 12 months ago. Plus, if you look at still, even after all of these downgrades, if you look at the expected growth rates for fiscal 25 and fiscal 26, I mean, still above 20% year-over-year growth for sales, EPS growing much faster than that as well. So yeah, it is becoming extremely attractive to me. And funny enough, today, 3 people messaged me saying, oh, I just bought more AMD or I opened a position in AMD. I mean, I usually never get these types of messages, but now maybe this is a signal. Anyways, right now the average analyst price target sits 50% higher than the price we're at today. Quickly looking at Intel, well, Intel year on year is down close to 54%. Intel doesn't even need downgrades from analysts to go down. It goes down automatically, doesn't matter. It has a market cap of $85.5 billion and a forward PE of 29.4 times. Year to date, the stock is down 1%. Now here, of course, the expected growth for sales is not much in the next 2 fiscal years, but bottom line, yes, bottom line is expected to become more and more profitable. At the time of making this video, the average analyst price target sits 20% higher than the price we're at today. 46 analysts covering this company, and 37 of those have currently a hold rating on the stock. Now today, just like many days, there is another analyst that came out of nowhere with a downgrade for AMD from buy to hold, cuts the price target from $160 to $129. And I want you to focus extremely hard on the first couple of words of this paragraph. We should have done this 10 months ago. Okay, thank you very much. I already understood where this is going. I mean, I'm sorry to say, we should have done this 10 months ago. As an analyst, you should not be saying this. People are paying you a significant amount of money to make sure that you do this 10 months ago because you think the story has changed. No, you don't do this 10 months later when the stock is down over 40% and, well, the sentiment is thrown completely out of the window. So he said, we should have done this 10 months ago after an epic run for AMD, up over 40% at one point in Q1 24. So we better have a reason. Believe it or not, it's not due to DeepSeek. We cut numbers already on January 6 on GPUs and the stock actually went up 3%. So a guide down on disappointing MI300 sales for 2025 is already expected. We are now cautious on x86 server and listen to this reason. We are now more cautious on x86 server and PC over the long term for AMD. The reason? We think Nvidia is going to increasingly come for them in both markets with their ARM-based CPUs that are optimized for accelerated PCs. Additionally, we are increasingly concerned that custom CPUs and Nvidia CPUs will cannibalize even more of the x86 server market long term, even though AMD's current chip, Turin, is doing well. As a result, we are cutting our estimates again and are now well below consensus. Our 2-year target is now $129, that was $160. I'm sorry to say this, because first of all, with all due respect to Nvidia, they currently have no consumer products when it comes to CPUs, right? The thing they've announced, that workstation that runs on Linux, that $3,000 workstation, does not work if you do not own another PC. Okay, that's currently. But how are we now putting these types of price targets and whatnot on what might or might not happen a couple of years from now? And disregarding the fact that x86 still exists, still performs quite well. Not only that, AMD also competes directly with Nvidia, not just on training. Of course, Nvidia there has 90+%, I think, market share, but on inference, highly competitive. And not only that, in 2026, we have MI400 that's coming out that should be extremely competitive against the likes of Nvidia. So disregarding all of that, because maybe Nvidia's launch in CPUs in the next couple of years might destroy x86. We've already seen what happens, right, with ARM-based CPUs from Qualcomm. Did they destroy anything? No. They've shown you actually that the ecosystem of x86 is actually pretty big, pretty strong, and ARM has a lot of work to do to catch up to what x86 have been doing for decades now. Now, I'm not saying we should fully disregard this, but he seemed to be missing quite a lot of pieces of the big puzzle here, not just for AMD, but for Intel as well. And then when it comes to DeepSeek, of course, all the semiconductors got hit quite heavily on Monday. I already did a Nebius video. If you missed that, that will be in the top right corner. But I think DeepSeek showed us that companies like AMD and Intel could very much be big winners right now, especially when it comes to inference and also AI on device, AI on your smartphone, AI on your PC. So I wrote down a couple of things here. One, they could be winning inference market share, so they could target cost-sensitive sectors, for example, enterprise SMEs, with affordable inference solutions. For example, Intel's Gaudi 3 claims 50% lower inference cost versus NVIDIA H100s. Then we have hybrid AI workloads. They promote CPUs with integrated NPUs. For example, with AMD, we've got the Ryzen AI, and then for Intel, the Core Ultra. For hybrid AI tasks, you can do local plus cloud. Then, of course, they could leverage existing relationships. They have deep ties with OEMs such as Dell, HP, and Lenovo, and cloud providers such as AWS and Azure to push their AI chips. And last two things here, of course, is open source software. They could double down on the open framework. We've already seen AMD issue a press release when it comes to DeepSeek, so they're definitely not sleeping on that. AMD's ROCm, Intel's OpenVINO, they could attract developers frustrated with NVIDIA's closed ecosystem and, well, NVIDIA's expensive chips as well. So here I'll repeat what I said in my Nebius video. Cheaper gasoline doesn't reduce oil demand if it leads to more drivers on the road. If you have lower cost of AI development, that will lead to more users to build, and that will lead to an increased total GPU demand or even CPU demand. Then we could see mass scale inference, right, which is good for AMD because we know that AMD's chips are quite competitive when it comes to inference. So that's good for AMD. But like I said previously, this could be great for on-device AI, which requires cost-effective, power-efficient hardware. So this plays to AMD's and Intel's strength in CPUs, GPUs, and specialized accelerators. And then, yes, you'll still need the high-end GPUs, right, from NVIDIA, MI400, MI350, and all of that to be used for the bigger models that then will train the smaller ones like DeepSeek or other specialized models. And for those that missed the Nebius video, it's basically this, right? You're going to say, oh, but didn't DeepSeek just show you that you can have less chips? Well, yes, but again, if you can have right now 100 users that pay you $10 or 1,000 users that pay $1, it's about the same, right? But what happens when you have 1,000 users that will pay you $2? The user pays 80% less than previously, right? From 10 to 2, but you just generated 2x the revenue. And you can probably do this with bigger numbers as well. So that's where I see things going, right? We've seen that with other technologies as well. I apologize if I repeat myself from the other videos, but we've seen that with other technologies as well. It first starts on a small scale, it's quite expensive, but then when it becomes less expensive, it gets exposed to more and more. And it's not like there is no money to be made. No, there is way more money to be made as more and more people get exposed to it, more and more people use it, they build on it, they sell, etc., etc. So I do think that something like DeepSeek is definitely, well, not definitely, it's not going to hurt AMD or Intel as much as Wall Street thinks. And with regards to AMD specifically, I think some of the analysts just don't look at the full puzzle. They just took the puzzle, broke it down in a couple of pieces and think that, oh, x86, that's an issue, so let's reduce the price target there. Data center, they can't compete with NVIDIA, so let's forget inference. We're not even going to look at that. Lisa Su's track record, we're not going to look at that either. And that's just short-sighted, in my opinion, just doesn't make any sense. With Intel, it's a bit more complicated, right? With two co-CEOs, which basically means there's no CEO. And then, of course, their investments in Foundry, that demands quite a lot of capital. Remains to be seen what happens with that. I think we're going to get quite a lot of information on Thursday. So all in all, I don't think the super bearish sentiment around AMD is warranted. Again, I don't have a position in AMD, so it's not like I'm trying to pump this stock. No, but I see in front of my eyes a very, very good company with extremely good leadership. And what I can also see is a Wall Street that likes to overreact right now and act before they think. That's what I'm seeing. That's not to say that we're not going to expect volatility. No, we've got earnings season, FOMC meetings. So yeah, a lot of things can happen. But if you can buy a great company for a cheaper price, who's going to complain? So all in all, that's about it. What do you think? Let me know down in the comment section below. Like, subscribe, all of that. And I'll see you all in the next one. Bye-bye.